Hi, I'd like to introduce Chris McAlpine, who is the co-founder of Context Capital, who we at Securitas have engaged as our asset consultants. Most recently, Chris was the Senior Investment Analyst at WA Super. In this video, Chris will be giving us an investment performance update of the Securitas 98 SMA model.
In a very challenging environment, Securitas' 98 model had a negative return over the June quarter of 11.81%. Over an extremely turbulent first half of 2022, equity markets have seen very steep declines as investors struggle to get to grips with the implications of a macroeconomic environment that looks quite different from the previous decade. High inflation, rising interest rates, weak consumer sentiment, and geopolitics have all combined to negative effect for investors. Rising interest rates put pressure on equity and bond valuations simultaneously, and the prospect of lower growth and potentially even recession puts a damper on most types of investments. The result has been a market where there have been very few places to hide. The Australian share market was down almost 12% over the quarter. Broader market indices were not spared pain either. The MSCI World, excluding Australian Shares Index, fell by over 8% over the same period. A broad measure of the Australian bond market fell by 3% over the quarter, marking a sixth consecutive month of declines. A widely tracked index of global bonds has also fallen in every month of 2022 and finished down by over 4.5% over the June quarter. Property and infrastructure markets also fell, most significantly in the month of June. Performance for Securitas 98 closely tracked the fall in equity prices over the quarter, as we expect for this option, although it did outperform the Australian share market. Relative outperformance to Australian shares came from investments in infrastructure and alternatives, as both outperformed equity markets. Overall, performance for the 98 option has been in line with our expectations. This portfolio is entirely invested in risky assets and includes significant investments in active managers across all asset classes. While we fully expect drawdowns from time to time, over the long term, we expect this option to deliver strong returns.